Hey everybody, crazy times we're living in, huh? In this video, we're going to answer the question, will there be an economic depression this year in 2020? The answer to that coming up in a second. Hey everybody, I'm Hassan here at Noisehound. Thanks for visiting my channel. On this channel, we talk about news, the latest politics, cultural issues, economic issues, and we have a little bit of fun doing it. We're just getting this channel started, so it would really help us out. Go ahead and subscribe to the channel if you want to get the latest content and like the video. Okay, so first of all, will there be an economic depression this year in 2020 as a result of the economic impact of the coronavirus outbreak? Well, let's start with the definition of an economic depression. It has a really high bar. So an economic depression, according to Investopedia, is defined as a severe and prolonged downturn in economic activity. A depression is commonly defined as an extreme recession that lasts 3 or more years and leads to a decline in the gross domestic product, a decline of at least 10%. So just real quick, we'll get this out of the way. Gross domestic product is basically the monetary value of all of the goods and services that a country produces within its borders, within a certain period of time. So will we have an economic depression this year? Well, here's some bad news first. Goldman Sachs is predicting a reduction in gross domestic product for the second quarter of 2020 as much as 24%. We've never seen a reduction in gross domestic product like that before, but it's really not that hard to fathom given the fact that we have basically essentially put the brakes on the economy for the last 2 weeks. Nobody's going out to restaurants, nobody's going out to movies, nobody's flying on airlines, certainly nobody's going on cruises right now. So all of that type of normal economic activity has stopped. So that is going to have severe implications. However, even before 2 weeks ago, you saw companies canceling events like conferences and national meetings and things of that nature. Those things will also have implications for the economy in the long term. So a 24% decrease in gross domestic product for the second quarter is not hard to fathom at all. And then in terms of unemployment, Goldman Sachs is forecasting as many as 2,250,000 job losses. That's not hard to imagine either, given the reduction and the slowdown in economic activity that we're seeing right now, which is unprecedented. We've never, on a global scale, stopped economic activity for an extended period of time. And we're, almost 2 weeks into this, and certainly here in the United States, it's going to be at least another 2 weeks, if not another month or two. So we could definitely see some unemployment numbers approaching those levels. Just last week, we had a 33% increase in unemployment claims here in the US, 281,000 new unemployment claims. Our unemployment numbers come out tomorrow. So today is March 25th. Tomorrow, March 26th, is when the unemployment numbers come out for this week. If you see anything, close to 1 million, we're gonna see the stock market react to that. Now today we had a good day on the market. Yesterday we had a great day on the market. And there is reason for the markets to have some optimism. Before I get to the good news, so according to Treasury Secretary Mnuchin, he says unemployment could rise as high as 20%. If you've been following the unemployment numbers recently here in the US, just 2 weeks ago, we had unemployment rate of 3.5%, the lowest unemployment rate in 50 years. So going from 3.5% where we were 2 weeks ago up to 20% is hard to imagine. We will see what happens. And if that wasn't bad enough, the president of the St. Louis Federal Reserve Bank says that the unemployment rate could rise as high as 30%, and the reduction in GDP could drop as much as 50%. Those are certainly dire numbers. Certainly, we're not in the same position that we were in 2008. We are a little bit more ready for a crisis like this. I think we learned a lot from the stimulus that happened in the global recession in 2008. We learned that our stimulus, our initial stimulus that was approved by Congress and President Obama was not enough. They needed to go bigger, and so that's why I think you're seeing the stimulus numbers now much bigger than the numbers that were being discussed back then. We need bigger numbers now because this crisis is bigger than that. Now, in order for the stimulus to work, though, it needs to be targeted, timely, and we need to put the money in the people's hands that are most likely to spend it. I do have some concerns about the direct payments that are in this bill. Certainly there are people out there that are going to spend the money, but you can't guarantee that. And who knows, there may be some people towards the upper end of the income range that are going to receive these payments that could save it. And that's not going to help the economy at all. Now, the other things that are in the stimulus bill certainly will help small businesses stay open and keep people on the payroll, which will all help. The more people that we can keep employed and less we're paying out in unemployment, the better we're off we'll all be. But there's also money in the stimulus that will support those that do lose their jobs. They have beefed up the unemployment insurance payments for the short term to help people get through this crisis, which is all good. The other thing that's not the same as 2008 is I think that companies in generally here in the US are a little bit more comfortable and willing to have people work remotely. And I think that will have an impact on employment. I don't think that companies will be as quick to let people go. I think that they will allow people to work from home to the extent that we can still be productive and work at home. I think that companies will be more willing to do that now than they were 12 years ago or 11 years ago, 10 years ago. So I think that will matter. I'm not quite sure how much that will matter, but we will see. Here's some good news. Former Federal Reserve Chair Ben Bernanke today says that we will see a sharp V-shaped recession, so probably somewhere along the lines of what Goldman Sachs is talking about for the second quarter, maybe a downturn of about 24%. He says that it will be followed by a quick rebound. Now that helped to boost the markets today. One other piece of good news that came out of the markets today is that Nike reported their quarterly earnings today, and they reported better than expected sales and told investors on their conference call that they're seeing a better than expected recovery in China. So that's really good news. So all of this to say is nobody knows how bad this is going to get or how bad this could be. All of the speculation right now is just that. It's speculative. Nobody really knows. We've never really been through anything like this before. It could be painful but quick, or it could be painful and extended. Let's say, for example, that we start to see these reductions in unemployment and gross domestic product, and then we start to have problems in the liquidity markets, very similar to what we saw in 2008 and 2009, where banks aren't able to pump liquidity into the markets. If we have a situation like that on top of what we're experiencing here in 2020 with the coronavirus pandemic, then we could see something that's really bad and will take a long time to recover from. Now, having said that, one of the things that is part of the deal that the Trump administration made with the Senate today, with the stimulus package, is in addition to the $2 trillion that's targeted for the stimulus, they've identified another $4 trillion that they are putting into the markets, into the liquidity markets, to make sure that banks have money to lend to businesses to keep the economy going. Now, these aren't bailouts. This is money that's meant to fund loans to businesses. These are funds that will go directly through the central banks into the economy to make sure that the economy continues to function and continues to go. So that's good. That's good news. So again, we've learned some good lessons from the global recession of 2008, 2009, and hopefully we can carry that forward to help with our recovery from this economic downturn. All of that to say that we really need this stimulus bill passed. Our politicians in Washington are being children, and they are they're just not being supportive of what we need, because we need this stimulus passed now. You have certain House members that are looking to put things into this stimulus package that don't belong there. I'm not saying that they're not worthy things, and they're things that definitely need to be debated and addressed at some point. Things like carbon emissions for airlines. This doesn't belong in this bill. This is not the time to hold a gun to the airline's head and say, we're not going to save you unless you agree to these increased emission standards. That would be the equivalent of the Republicans saying that in order to fund the hospitals, no abortions could be performed, or how do we make sure that there are no abortions performed with this money? You don't hear Republicans saying that, because they're not trying to get their pet projects into this bill. They could say that, well, nobody's going to church right now, and so we need to bail out churches. They're not saying these things. I understand there's separation of church and state, and that would never go, but I'm trying to illustrate for you how ridiculous this is, that there are these things in the bill, like airline emission standards. Some of the other things are tax breaks for windmills and solar farms, student loan debt reduction. Now that would actually help some people in this time, but this is not the time for that. If we reduce people's student debt burden by $30,000, which is what's being discussed, how is that fair for future generations? For my kids who are right now 17 and 15 and going into college pretty soon. Maybe something like delayed or deferred payments. So the next 12 months payments will take care of, or something like that, or the government will pay the next 12 months payments. I think that would make a lot more sense than just across the board $30,000 reductions in student loan debt burden. We also saw things about increasing the power of labor unions. Again, these are worthy things that we can debate in Congress, and they should have those debates at the right time. This is not the time. We Americans need the stimulus package to pass quickly in order so that we can have the quick recovery that former Fed Chair Ben Bernanke is forecasting. So with the stimulus that's being passed, we'll see the recovery. Hopefully the adults will show up in Washington and get the job done. Again, this is Haseen. Thanks for watching. Hope you like the video, and please subscribe to the channel if you want to get the latest updates from us here at Noisehound. Thanks. Have a great day.